Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again in euro currency. So yesterday we've got the European Central Bank meeting. The comments from the Draghi were mostly dovish, as we have suggested, because he said that the policy of the European Central Bank will remain accommodative, and the perspective of the growth in general are weak because of possible hard Brexit, and in general, as you know, there's problems with the it's a difficult situation in many countries in the European Union right now. So it's Germany, the political situation, in France, there's a turmoil. So this will be really costly for a budget. In such circumstances, also existing of the problems with mutual trading with the United States, among the United States, China, United States, European Union. So all this stuff is putting the shadow on the perspective of the growth. So as a result, the comments were mostly dovish. Now investors gradually is turning to Fed meeting that we will get next week on 18-19 of December. The increasing of the rate is anticipated, but what will be said about perspective of the inflation and growth in the United States, that's really the question, and that's what investors will be looking for. Speaking on the short-term technical picture, as we said yesterday, euro currency right now is too sensitive to external driving factors, and in fact, it has no inner direction that could be based on some fundamentals, on some statistics, some investors' expectation. But mostly, everybody looks like just stand flat and wait what next driving factor will appear on the market. As soon as something appears, market moves in that way. So. Just recently, a couple of days ago, it was the postponing on the voting on the Brexit. Market collapsed. On the next session, Theresa May has got the support in the parliament, and everything is rising. So, as you can see, it's very difficult to make any forecasting here. The situation stands here tricky. Still, yesterday we agreed that currently it's not time to go short because we have some bullish patterns in the market. One of them has been formed 2 days ago. This is bullish grabber, and in general the price action that we saw on the intraday chart does match the normal bearish market behavior. So after the strong collapse, as we saw within the 2 sessions, market mostly has erased the recent drop with a very fast speed. This market has dropped here very fast. Market cancelled it by this upward action, broken through the conference resistance, and stands about since there. So this is not actually bearish. And since this is also accompanied by the grabber on the daily chart, it doesn't let us to use the bearish context for trading. So actually on the daily chart, we have the bullish context. We're not pretending on a possible upward breakout and some reversal, something that's sort, but at least while the grabber holds, market stands inside an consolidation, so fluctuation inside of it, upward action right back up to the trend line. It's very probable. It could happen. So actually, to honestly speaking, something of that sort we are waiting for. So it means that currently we mostly have the short-term bullish context rather than bearish. On the 4-hour time frame chart, take a look what we have. The same triangle, but yesterday also on the Mario Draghi comments, as you can see, there was limited reaction actually. So if market really would be bearish, these comments from the Draghi should be enough, should be sufficient to just trigger downward continuation. But while reaction in general was negative, it was not dramatic, so it was just pulled back to the major 618 support here. Market stands here and starting upward action. So take a look that also we here have got yesterday the bullish grabber. This grabber suggests the taking out of this stuff. It makes me think that in the short-term perspective in today's session, maybe in the beginning of next week, we could get this ABCD pattern with that could bring price back to the top line of the triangle. So it's approximately 114 area, 114, 114.15, somewhere in this level. Also, yesterday we talked about the possible hand and shoulders pattern. Here we said look at for a deeper retracement. So currently we can't go short because take a look at the price action. What has happened here? That is not bearish. That's not the kind of bearish behavior. So wait for pullback because Draghi probably will said something bad about the euro, and indeed that has happened. That could be the chance to go long. So market has dropped to somewhere to the 618 support. Take a look at the Twizzler's bottom has been formed. That also confirms the existence of some real purchases here in around this area because lows are equal. This indicates that some kind of signs of power. So the market shows the same lows for two candles. And starting upward action. So that point, guys, actually will be crucial point for a short-term perspective. Because if this is a really bullish scenario, so market should proceed higher with this kind of the hand shoulders pattern on our ABCD and so on. So also we could recognize here the butterfly could be formed something. In general, both patterns leads us to the same destination point around 114. While these lows will be taken out, that will be not normal behavior with the context that we see. So breakout of these lows could turn situation in the opposite direction, and that in turn could lead to appearing of the butterfly here to the downside. So market could form downside leg and break these lows. Taking out of these lows, still raise the grabbers, and even forming A, B, C, D pattern here down will raise the grabber on the daily chart as well. And in general, it could lead to breakout of this triangle. So that's why I keep an eye on this point. That is simultaneously the invalidation for long entry. So here I draw, as you can see, regardless cheaper to buy, so you could wait for a minor retracement. If you have missed entry in this point, you could wait for some meaningful retracement, not necessarily 618, maybe this will be 50%, just for a minor pullback with attempt to take in the long position with the stop somewhere below these lows. So as you can see, it will be very small risk. So 1330 and 1364, 1450, just 20 pips risk. But potential is really very significant. So that's in general the setup that we will be watching for in the short term. Let's see how it will turn.